A splendid evening it is to you viewers. Welcome to yet another edition of Special Focus on Equity Access, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast from our Hampton studios in Harare. I'm Ibn Mabunda. Let's get started. Now, on the program this evening, we'll look at the interim budget that was, of course, issued by the Finance Minister, Professor Mthuli Ncube, just yesterday, which detailed what has transpired in the economy since the beginning of the year right up to this point. Now, of course, this is coming in when the country is grappling with several issues of interest to the progression of the Zimbabwean masses. But before we can get into the teensy-weensys thereof, we have a look at what transpired during the course of the day. London and New York Exchange listed Caledonia Mining Corporation says it has completed the sinking of its central shaft in its blanket mine here in Zimbabwe. The mining project of course, has cost the institution a good $44 million in a move toward improving its output. Production from blanket mine is then expected to progressively increase to reach a target of 80,000 ounces of gold annually. Current production is within the gold target set at between 53,000 to 60,000 ounces of gold. And as I just mentioned, they intend to hit a good 80,000 by 2022. The Reserve Bank of Zimbabwe issuing through an auction system treasury bills for the first time in 7 years. The value offer for treasury bills was up to the tune of 13 million Zimbabwean dollars. There was an oversubscription coming in with bids of $133 million. The highest rate was 40% and the lowest at 15%, with an average coming in at 15.6%. This, of course, is indicative of the high appetite that you find for these TBs among the banks. Then now coming on to what transpired yesterday, where the Finance Minister issued the interim budget. This is, of course, not the norm, but this is coming in at a time where the country is grappling with runaway inflation, which came in at 175% in the month of June, a weakening exchange rate which has lost 267% in terms of value, fuel shortages, excessive load shedding running up to 18 hours, affecting the operations of corporates and, of course, the comfort of local citizens. Food crisis is also in perspective, with an estimation of over 5 million Zimbabweans in need of food aid, and of course fears of a contracting economy, with the IMF and the World Bank estimating GDP declines of 5.2% and 3.8% respectively, which technically spells out a recession. Now, from the budget, of course, there are several issues that we highlighted. I'll just go through just a few of them. Then, of course, we'll get to discuss these issues in detail. One of the key issues from the particular budget are issues to the fact that the Economic Empowerment Act will be repealed, which of course stated that Zimbabweans were entitled to owning a good 51% where mining operations were concerned, and now this will be replaced by what will be known as the Economic Empowerment Act, which is meant to support the mantra Zimbabwe is open for business. Tax-free threshold increased from 350 Zimbabwean dollars to $700. The 2% tax levied on amounts of $20 and above from the pre-stated $10 on, of course, the mobile transactions that have been in effect. Excise duty for petrol and diesel now at 45% and 40% per litre for petrol and diesel respectively. Duty on electrical components for manufacturing sector removed. Tourists now to pay levies in forex. Exporters to pay for electricity in foreign currency. Electricity charges up 3 times for domestic consumers. Duty on lithium solar batteries now has been removed. Mobile money agents to pay of course money transfer tax. Now, to get a response on social media from several key players in the economy, Zimbabwe Council of Churches saying that the budget is no longer responding to the needs of the people, more so the disabled, and of course BBC News Africa tweeting on the development that the 51% ownership bill has of course been revealed. Former Finance Minister Honorable Tendai Biti says the citizen is having under the weight of extractive taxes, which are now more than 35% of GDP. Kudamugova, they're tweeting a statement issued by Newswire which says travel just got more expensive. You will now pay a good $10 in highway toll gate fees for light vehicles, up from the previous $2. Buses now pay $20, which will drive up fares. Prof. Steve Hank says, okay, Professor Mtuli has said Zimstats will now suspend the issuing of the statistics where headline inflation is concerned. And so he says, I'm now the only source for Zimbabwe's inflation rate. Vince Musewe, an economist, says we must spend more resources and time on industry and services and not on primary production to create industrialization. Quite a bold statement right there. Again, another statement by Vincent Musewe where agriculture is concerned. He says, by spending in excess of $3 billion Zimbabwean in the revised budget on agriculture, what are the expected qualitative outputs and what's the implementation strategy? A bold statement right there. Then Pusisa Moyo, the president of the Presidential Advisory Committee, issues also his statement as a producer of oil. He's got, well, quite an interesting analysis. He has the good side and then the bad side. At the bottom of this tweet there, he says support for agriculture, especially center pivots, will increase output of grains and oil seed. Then he also says twin deficit, fiscal and trade now under control, leaving the moral deficit, which is corruption, stability over time. Then at the top there, he gives, of course, the negatives of his assessment of that budget. He says the pharmaceutical industry needs intervention. Worker absenteeism due to personal or family health could still remains. He also says no bonus relief for year end to stimulate festive cheer. He says, of course, that's a negative. Then Brains Mchema coming in to say, why did the electricity tariff increases have to wait this long to be announced on the mid-term budget review? He then says, I honestly don't see the logic. Now, we will take a break. When we come back from the break, we'll get into the analysis with, of course, one of our very own economists, Tinashe Kaduo. Don't go anywhere.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.
Welcome back, viewers. I'm now joined on set by our very own economist, Tinashe Kaduo. Tinashe, good evening and welcome to the show.
Thank you, Eben. Good evening.
Beautiful. Let's get the ball rolling. Well, interesting development there. The finance minister issuing, of course, that interim budget with, which of course has sparked a lot of reaction across social media, across industry, as the general populace tries to make head or tail of what this actually means. But in the presentation of his budget, Tinashe, the minister started by giving a, should I say what I'd call a feedback, a comprehensive feedback of what we have seen play out in the economy with regards to GDP, inflation, the fiscal outturn, as well as the current account status. And among the things that he did indicate was the fact that previous to what he had indicated that he would expect the economy to actually grow by good 3.1%, he concedes and says, look, we expect the economy to contract due to issues to do with, inflation, power cuts, fuel shortages, and of course the cyclone plus the drought that currently has had to face in recent months. Now, he went on, of course, to explain how that inflation will not be published on a will not be published in terms of the headline inflation by Zimstats, as there is need to factor in currency changes that have actually that we've actually seen play out. Then, of course, he went on to explain the fiscal outturn, how there's a budget surplus of $803 million in the first half of the year, and then, of course, a surplus of $196 million in the first quarter, revenue collections of $14.1 billion, current account balance with exports of $1.9 billion within, of course, the first half of the year. What is your general assessment, Tinashe, where these stats are concerned?
First of all, I've got a problem, one, in terms of the finance minister's general assessment of the economy. If you look at, first of all, the statement that both the current account and the fiscal side of things, they are now under check and in control. He actually alluded to the fact that the current account in the first quarter, we recorded a surplus. But looking at the Zimstat numbers in terms of trade, we are saying that in terms of in Q1 of this year, in the first quarter of this year, we were in a deficit in terms of current account performance. Then you also look at the performance year to date, we are also still in a deficit position. But the deficit, yes, it has narrowed down from the previous average of excess of 1 billion over the past 5 years to the current 399 million deficit, if you consider the recent statistics from Zimstat. So I don't know what the finance minister was saying when he said actually we had a current account surplus in the first quarter. The numbers, they are not supporting that.
But he's been talking about these surpluses across the board since several weeks, back, even months.
But the official numbers from Zimstat, they are not showing that. So his source of information is something that I have, concerns over that. Then you also look at the fiscal performance. Yes, we are in a surplus. Yes, I support that we made an 803.6 million surplus in the first half of the year. But we have to, to assess the quality of the surplus. If you look at it, we are seeing a situation where the government continues to rely on treasury bill borrowings for it to sustain its spending. But on the other hand, we are seeing the finance minister is saying that we had a surplus where revenue exceeds expenditure. But then why are we continuing borrowing using treasury bills? Because over the first half of the year, we actually increased the treasury bill borrowings, I think, by a good 230 million or so, if I captured my numbers correctly, which is actually a source of concern there. So I believe that there are still, certain mismatches in terms of expenditure side as well as the revenue side. So to say that the fiscal side of government as of the current account is now manageable, is under check, I think it's not a fair assessment there. I really think that we still, the fiscal position is too precarious, as well as the current account is also still under pressure. Why do I say so? We are looking at a situation where inflation is still high, and the inflation pressures they are still elevated. You look at the wage bill, the 44% increment, I don't think it's a fair increase in terms of adjusting, the civil servants' salaries. You are looking at the cost of living that is escalated by almost above 200%. Then you increase spending on your wage by a mere 44%. It means that going forward, there still be pressures from civil servants for them to be adjusted their salaries in accordance to the cost of living. Then you also look at the import side.
But maybe before you can continue, is there not maybe an initiative by the minister there to bring some kind of balance in terms of the fiscal aspect of things? He's trying to see to that the expenditure by government is within check. Because any increase on the part of the civil servants, that would actually impinge on our ability to bring balance where the fiscal side of things is concerned.
First of all, Eben, when you are doing your budget, sometimes you have to be realistic. You have to take into account your proper assumptions of how the economy will play out. So why do we do budgets? Is for us, to act in accordance to certain targets. So if you give yourself a lower spending targets when there are pressures for you to spend more, you are not being real. That's when you see unbudgeted for expenditures churning out, or actually taking out over the year end. You have seen over the past 6 months of the year, our expenditure was above what we had set aside. Our budget, our expenditure was actually a bit way off budget, implying that if we had done our assumptions and our research well, we should have set our budget or our expenditure levels in certain limits that is real and that is achievable and that is attainable. So to me, that increase by from 4.5 billion to around 5.9 billion in terms of the wage bill, I don't think that it's real, because I actually expect to see civil servants actually pressurizing the government for that cost of living adjustments. You look at the private sector salaries for employees. I think in some companies that's why to cushion their employees, they've gone up by almost 200%, and I think civil servants, they deserve the same as well.
And this is, of course, a 37.28% increase in that regard.
Yes.
You look at the graph, the regional budget was 4.05 billion, and now supplementary 1.5, which brings us to $5.5 billion.
Which I think the 1.5 billion are supplementary. To me, I don't think it's adequate because you've seen that the government actually recruited more people, which were for those key positions. Then we are seeing the cost of living, which has escalated by almost, like I said, 200%. So I think that increment, the 37%, it's not enough. And I foresee more and more civil servants pressurizing the government to adjust their salaries.
So that then plays out what would it spell out in terms of the implications. But okay, hold on a second. Let's talk about the revision in terms of duties and taxes. We've seen electricity tariffs being hiked a good 173% for domestic consumers, and for non-exporting businesses is an increase of 356. Agriculture consumers, that's a good also 173% increase in that regard. What is your comment where these stats are concerned?
The problem that we have in the energy sector is that we are producing below what's required. I think our capacity right now, what we are churning out is around 35%, implying that there is a huge deficit. So to meet that deficit in the short term, I think it has to be met through imports. So I think it's actually a good initiative from the finance minister to increase tariffs such that ZESA would have adequate resources to meet that import needs. But the increment, especially for domestic consumers and the agriculture sector, I don't think it's sufficient. Because I don't see why the government should continue, subsidizing consumption, especially for domestic use. For the non-exporting business, I think there was a consensus between business that, okay, let us just meet the import requirement for electricity such that we have, a sufficient supply of power. Then we have seen actually, yield constant the price of electricity for those chrome smelters and other large-scale smelters that are operating.
Which, of course, have been quoted in US dollars.
Of course, yes, they continue to pay in US dollars.
I think that this is something that has been long overdue, and now that it has come through, I think I would welcome it with open arms, because the previous prices that we've had, they were pretty much suboptimal and uneconomic. And at this point, this coming through, this would perhaps improve service delivery on the part of ZESA, and this could actually alleviate the load shedding that the country has been grappling with. But let's talk about the impact.
But the major challenge there that we have, especially in the power sector, is that huge debt that we still owe to foreign suppliers. So this increase, I don't think, is sufficient enough to cater for the current needs, as well as to cover that legacy debt. Then for domestic consumers, maybe the finance minister is saying that the cost of living has escalated. So if I aggressively increase the price of electricity, maybe there would be some certain outcry from those domestic users, which are your general public.
I realize. Now let's talk about the tax. What is played out where taxes are concerned. We've seen the tax-free threshold increased from $350 Zimbabwean dollars to $700, as well as the intermittent taxes there, which have been raised from just the $10 right up to $20. How important is this particular initiative?
First of all, maybe to start with the income tax, where the threshold has been increased from $350 to $700. Looking at what has transpired on the ground, salaries of most employees, they've gone up, and most of the salaries, they are now above, on average, $700. So to me, on an average basis, the impact of that increase of the tax-free threshold, I think it's only it's only a few people who feel that impact, because most of the employees now, their salaries are above the $700 mark. Then in terms of the intermediated money transfer tax, that's where I think my concern is, because we have seen that it has actually been expanded on balance, from those transactions that were exempted. If you look at what has been happening before, an agent to an agent transfer, it was exempted from that 2% tax. Like if you've got an agent code, an EcoCash agent code, you want to pay you want to transfer to another agent, that transaction was exempted from the 2% tax. Then when you are also doing your cash-ins and your cash-outs, there wasn't that 2% tax. But now we have seen that the 2% tax has been expanded to such transactions. But yes, there is an upward review in terms of that tax-free threshold from $10 to $20. But what's your $20? It's now equivalent to $2 US. And when that policy was implemented, your $10 was equivalent, to something like your $3 US or something like that. So I think this is just an adjustment to inflation, and I don't see it having a significant impact in terms of alleviating the consumers. But on general, I'm seeing it as a policy that has been expanded or cemented. And I'm seeing that the finance minister is actually using that 2% as one of the major tax revenue drivers.
Yeah, because earlier on he did indicate that there would be an alleviation of that tax burden, but
Yeah.
it seems that there hasn't been much of a difference. I think
Actually, there is no difference. There is not
Yeah,
even a
because-
difference at all. Because with $10, who now transact with $10? What is it that you purchase for $10? I think the minimum transactions when you go into a shop, you would now require something in excess of $50 going upwards. So $10, there is no change at all. Nothing has been done in respect of
so.
that.
Your interpretation is the minister is saying "Viva austerity, viva."
Yeah, sure. and I think is actually those is actually echoing the sentiments of remember of the Foreign Affairs Minister who said brace yourselves
For another
for
3
more
years.
3 years of hardships.
Let's talk about the excise duty for petrol and diesel, which have now been increased to 45% as well as 40% per litre. How significant is that initiative?
My fear is that increase might be transferred to the final consumer through increased retail prices. But we are seeing we are in an environment where the fuel or the energy subsector is still controlled by the government. Maybe ZERA will not aggressively increase the recommended retail prices of petrol and diesel. But obviously, when you increase taxes, prices have to increase. And if you see an increase in price of fuel, it has a domino effect to other prices in the economy. When you increase your price of fuel, it means that the price of bread has to increase, the price of the beverages has to increase. So that will add into your inflation. So all those increases in taxes, to me, they are more inflationary rather than solving the issues that are really affecting the economy.
Well, talking about, of course, the inflation, it seems as though there's a series of measures that are somewhat feeding into inflation. And now it will be difficult for us to maybe have the exact trace of where the inflation would be at, since the minister said now there won't be any publication in terms of the headline inflation from Zimstats.
But you see, Zimstats will continue calculating the CPI numbers on a month-on-month basis, and maybe what the finance minister is trying to say is don't focus more on a year-on-year change in prices, but maybe focus your analysis more on a month-on-month basis. But when you have, the current month CPI, we still have, that those CPIs from those previous months. So you can continue, calculating your own annual inflation on your own. So, but I kind of agree with him that there are certain changes that happened in terms of the structural shifts as a result of change in the currency use. But if you look at what happened in the economy exactly, we didn't shift from the US dollar to the local currency abruptly. I think it's something that happened on a gradual basis. To me, the economy since maybe sometime around June last year, we are more of a local currency economy, and the prices were reflecting. They were actually a reflective of that dynamics. We had seen, prices being charged or being pegged to US dollar, then priced an equivalent local currency or RTGS dollar price. Those days when you went into a shop, or when you go into a shop for a certain commodity, you would find it that transacting in US dollars would be given, a much fairer or lower price. Then when you want to pay using maybe Swipe, EcoCash, you will be charged, a different price, which is high or even higher above the parallel market rate. So I think the prices in the shops at that time were a true reflection of what was happening on the ground, and I don't see any problem of continuing, calculating year-on-year inflation, even if we had, this currency change.
And then lastly, just before we take a commercial break, what is your assessment of the removal of duty on importation of lithium batteries as well as on tires?
To me, those like removal of duties on those batteries, they are just reactionary measures, and I don't think would have any major impact on the economy.
But
we need electricity, we need power, we need electricity,
those are
we
pretty
need power.
Positive moves.
To say that we have failed to supply, reliable electricity, so rely on solar, and solar to me it doesn't have much impact in terms of even domestic use as well as industrial use.
But that is in line
how many solar panels do you need for you to power your 4-plate stove?
Well, Tinashe, we'll come back. We'll elucidate on this when you come back from the break. Don't go anywhere. Welcome back, viewers. We're still on Special Focus, and I'm still with our very own economist, Tinashe Kaduo. Tinashe, well, this, of course, would be the figures of the total budget. I just want us to break down these figures to get into the implications that they have for the country going forward. This here is the original budget, which had a deficit of $1.5 billion, and now in the revision, we've got a deficit of $2.9 billion. Penultimately, this spells out a deficit of $4.56 billion. Your comment where these figures are concerned?
Yeah, if you look at the initial budget, first, where we were targeting expenditure of 7.7 billion, then revenue of 6.2 billion. The finance minister actually was projecting or targeting a deficit of 1.6 billion. From the supplementary budget, what we are saying about supplementary budget, these are additional spending or revenue requirements on top of what we had budgeted. So we are saying that in terms of the supplementary budget, is actually saying that I would want to spend 10.8 billion or 10.9 billion more than against revenue that I'm projecting to add on of 7.9 billion, which would channel out to 18.6 billion in terms of expenditure by year end, then targeted revenue of 14 billion, giving a much deeper deficit of 4.6 billion. But for me, where I have a problem is like what I've been saying is in terms of these budget numbers. Sometimes we have to be real. When I'm saying we have to be real, is I'm much worried about the 14 billion budgeted revenue. If you have seen how revenue has played out in the first 6 months of the year, we have collected, tax revenue of something like 5 billion, which I think the best we can do in terms of tax revenue in the remainder of the year is maybe another 6 billion, which gives you something of around 11 billion in terms of revenue that we are likely to collect. Maybe we might get in maybe an extra billion or so from support institutions. So I think the best we can do in terms of revenue to year end is something around 12 billion rather than the optimistic 14 billion. We are in a recession, and the recession is real, and the finance minister has also echoed those same sentiments by revising downwards the GDP growth from 3.5% that he initially targeted to negative 2%. Then IMF actually is projecting a much deeper recession of negative 5.2%, then World Bank negative 3.8%, equity axis, I think we are on negative 3.8%, then IMF, World Bank negative 3.1%. But given these dynamics, if we take into account the assessment of the economy by the finance minister, I think equity axis views might be actually a much deeper economic recession, which might be deeper than the negative 5.2% being projected by the IMF. Watch out, for our key two paper. I think it will crunch out some of these, arguments in terms of economic growth. But back to what I was saying in terms of revenue vis-a-vis expenditure. So to me, revenue, the best the government can do is 12 billion, which gives a much deeper deficit of maybe around of at least 6 billion. So the implication of that much steeper deficit, if we accept that we are a 72 billion Zimbabwean dollar economy, it means that your deficit as a ratio of GDP will be somewhere closer to 8% or 9% thereabout, which I say that the target of maintaining a budget deficit below that 5% of GDP, I think the government will struggle to keep its deficit towards within that limit.
But is that not perhaps reasonable given the fact that we've suffered the effects of the drought, we've suffered the effects of cyclone and so forth? Is that not perhaps reasonable in that regard?
Well, you know what, Ibn, to me, I would say, what's reasonable in having, in spending more than what you are getting? It's not reasonable, because what you are doing on balance, you are accumulating more and more debt. Right now, as it is, as at June, our total debt stood at, is it 66 billion or 60 point something billion, which is something like 93% of your GDP, which is a source of worry. If your debt to GDP ratio is closer to 100%, it means that what you are making as a country in terms of production is all debt. You would need all your resources that you are making over the year to cover your debt. So it means that even your ability to attract investment or to attract capital at a lower price is diminished because of that high debt overhang. Your country risk is elevated. You are being said you are a high risk client there among international financiers. That's why maybe we are seeing low traction of investment besides actually preaching that we are open for business and something like that. Banks also are still struggling, to get cheaper lines of credit because of, this huge debt. So to me, what we should do as a country is maybe to prioritize growth. When you prioritize growth, you will be enlarging your tax base, which will help in terms of repaying your debt.
Right, you mentioned debt just now. Now these, of course, are the payments where the debts are concerned, and this orange line here spells out what government has budgeted for in terms of repaying our international creditors, moving from just $24 million to $206 million. I think this is quite a positive development, because it's time we start, setting aside significant amounts where debt repayment is concerned.
Do you know my worry is, you might want to say that the 230 million is significant, but if you look at the nature of our foreign debt, about 46.6 billion of that foreign debt component, it's arrears. When we say it's arrears, it means that it's us as a nation who are failing, to service that debt. So there is actually an accumulation of debt. So if you say 230 million as a fraction of the 46 billion arrears that we are accumulating, it's insignificant. 230 over 46 billion, it gives an insignificant ratio that way. So I think more still needs to be done in terms of servicing both your foreign debt and domestic debt. But of significance is we have seen our domestic debt coming down, implying that the government has been servicing the maturing TBs, as well as repaying the overdraft facility. But yes, it has been doing that. But what should be actually spelled out clearly is that the government has been actually restructuring some of those treasury bills into longer term debt. Some of the treasury bills which were maturing in 2 years or a year, thereabout, they are being restructured maybe into a 10-year paper or a 15-year paper, something like that. So postponing payment, to me, doesn't spell out like we are doing something right. We are actually postponing certain obligations, which I think with time they will catch up.
Well, thank you, Tinashe, for the perspectives. Thank you, VS, for staying with us. It remains to be seen how things actually play out with these policies that have been tabled by the Finance Minister. Once again, thank you for watching. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our informative website, www.equityaccess.net. From the Equity Access team and I, Danky, and ciao.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities, including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success. Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities, including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.
Good evening, ladies and gentlemen. Welcome to Markets Daily on Equity Access. Now, quickly as we get into it, my name is Anis Shimbumu, and what we have today on the market is a downfall once again, pretty much coming into the the 10th session straight in declines, with the all-share index coming off 0.64% for it to settle at 184.63 points. Industrials index settled at 616, which is 0.65% down from prior session level. And it continues to erode on the year-to-date gains. We are only now up 26.46% on a year-to-date gain in perspective. All-share index, top 10 index is only up 19.15% from its year opening level, as it is settled at 172.77 points after having shed off 8.33%, pretty much culminating into a 4.26% decline on a week-to-date basis. About 4 counters did come off today on the top 10 index. They mainly being cassava, that did drop about 2.65%, But because of Old Mutual, that did have a very good trading session throughout the week, where it has been pretty much going up on a day-on-day basis. Today it did add about 6.48% for it to settle at 175.38 cents. Now, for 5-day trend since last Thursday, we are settled at 2.63% down on the all-share index, 2.68 on the industrials index, while the top 10 index is settled at 0.81%, as it was stable today in trading. Now, quickly as well, we just gonna have a quick look at our rises and fallers. Old Mutual did add 6.48%. I've mentioned that. CBZ, ZHL, and Citgo International Limited did trail that set of four risers, coming up 2.25%, 0.22%, and 0.03% in that respective order. CBZ is enjoying a very good run as well. Up almost 70% on its year-to-date basis, after having settled about 56 cents today. Willdale was the worst performing counter of about 7 laggards today, coming off 16.67% to settle at 2.5 cents. Willdale is one of the brick manufacturers and is also into construction material that is in Zimbabwe, and it is only the only brick manufacturing company that is listed on the stock exchange, even though it does suffer quite some big challenge or pretty good competition coming in from the likes of Better Bricks there. Now, Star Africa have let up 10% for it to settle at 1.8 cents, even though they are expected to have better revenues. Obviously, their revenues won't be as impressive, especially considering that we're in a very much inflationary environment, and such kind of revenues are pretty much going to be driven by the rate of inflation. Simbisa settling at 95 cents after letting up 4.99%. Cassava 2.65% down. Econet 1.42% down. For our parallel market versus the interbank rate settled at 9.28 on a very steady incline day, weakening day on day, averaging around about 0.6% on a day on day basis in terms of weakening, while the parallel market today did have some trades going up as high as 10.8, but then averagely most trades were trading around about the 10.6 mark there, while the Old Mutual implied rate did settle at 13.49 to the dollar, especially considering that we did drop the Johannesburg Stock Exchange counter did come off about 1% from its prior session performance. Now, do not forget to get in contact with us for our Q2 economic review and outlook paper. It now also has the appendix of the budget's summary and analysis. Pretty much our paper is going to be covering a very wide base of economics in terms of us looking at the regional perspective, and then we zoom in more on the Zimbabwean perspective. As we zoom into Zimbabwe, we look at our political environment, policy environment. We also look at economic, banking sector, and then all other different sectors of the economy that are pretty much pertinent to the economy and its growth. Now, of note, one of our very key moments of pride, in my own opinion, would be that when we did coin ourselves in stagflation and also did expect us to be in a moment in recession this year, we did go ahead of world-renowned institute, which would be IMF, which then only later on joined the bandwagon in terms of expecting us to be in negative growth this year, and we're expecting much more worse, considering that the government also has pretty much reviewed themselves and did not like to give themselves a very definite figure, but then it is in the region that is below -2% in terms of growth. It is very worrying when you have a whole professor being very confident in one end, and then when things don't turn out to be as what he expected, he then flip-flops and changes direction and decides not to give everything. From the Equity Access team and I, don't forget to like, follow, subscribe, and follow our YouTube, Twitter, and Facebook accounts at Equity Access, and do visit our website www.equityaccess.net. Good evening.